BlackBerry has entered into a letter of intent to sell itself to Fairfax Financial Holdings. Fairfax is BlackBerry's largest shareholder, and they're going to pay a premium. Is this such a good deal? Well, joining me now is Tom Westdyke. He is a managing director over at CIT Corporate Finance. So, Tom, you know, Fairfax has owned BlackBerry stock since 2010. They were there when it was $69 a share. They have been riding the stock all the way down. Now they buy it and they pay a premium. Does this make any sense to you?
Well, I think it's a bit of a stretch from that perspective, from the outside looking in. I think what BlackBerry, despite its troubles in the consumer market and in the device market of late, what it continues to offer a lot of businesses is a very secure network connection and a very high level of security on email and network, which continues to be attractive on a subscription basis or on a product basis to a lot of corporations. So I think when you look at what remains here, I think the question is, can, under a private ownership, the company regroup itself, really pivot itself on those services, and perhaps re-enter the device market going forward?
Well, you bring up a good point. Private ownership. This company is a Canadian insurance company. I just can't imagine that being owned by a Canadian insurance company is going to make you become on the leading edge of technology.
Yeah, that's definitely a question that we're asking ourselves. I think, the transaction itself is in the early stages. There's just a letter of intent, and there's more due diligence to be had. And perhaps they feel by putting this offer out, they may attract some other bidders here. We've always speculated ourselves about some of the other device providers wanting to add the BlackBerry device, because it does have some unique features to it, to their portfolio. And perhaps by doing this, they attract some other folks to take a look.
Now, on the price paid, they paid a premium for this company, and they took a loss on their ownership of BlackBerry shares. In fact, Fairfax and its subsidiaries wrote down over $200 million in losses in just last year alone. Is buying at a premium, does that help them with these losses?
I don't think it does. I'd have to look at it a lot more carefully from an accounting perspective in terms of Fairfax to really say so. But from the outside looking in, it doesn't. I think, as I said earlier, this could be something where they're trying to attract some other bidders to the transaction. Or, in fact, given their history with the company, they may have a view with the board and with management that others may not, in terms of what the future prospects look like going forward.
All right. Well, it sounds like we will find out more from this story as it goes on. Of course, this information just came out this afternoon. And as you said, I'm sure that the details will come out as well. That was Tom Westdyke from CIT Corporate Finance, and I'm Deborah Borchardt with The Street.